Guys, we're going to do accounting theory. So with accounting theory, I don't think it's going to be a lot of marks. However, it will come out in our test on Tuesday, and so let's get into it. So I've compiled a couple of slides from that were given to us, and I've incorporated some references from the textbook. And so this will give you a guide of a bit, much more better guide, and in one video of basically a summary of chapter 1. But I do advise still go through your textbook and have a look at it. So firstly, it says what is accounting? Accounting is a system of gathering, analyzing, recording, reporting, and interpreting. And you'll find here the definitions. Secondly, tells you here the purpose of accounting, that it's used to convey a message about the finances, and the main purpose of it is to assist financial users in order to make an informed decision. Okay, so the users of accounting information, the internal users, you have internal and external users, would be owners, managers, and employees and their representatives. Okay, you'll find here owners use accounting information to determine whether their business is profitable and financially viable over a long period of time. Managers use accounting information to ensure the business operates efficiently and solve problems that's highlighted in your accounting information. Employees would use accounting information to check if the employer can provide stable employment and remuneration. All right. You have your external users, which is your customers, competitors, lenders, government, suppliers, and investment analysts. Customers use accounting information to check if the business can provide the product or service that they require for a long period of time. Competitors use accounting information to maintain a competitive advantage. Lenders use accounting information to determine if the business can repay a loan and the interest on that loan. Government use accounting information to determine if the business should be registered as a VAT vendor and the amount of tax and the amount that the business should be taxed. Okay. Suppliers use accounting information to determine if the business can repay for purchases made on credit. What does it mean? So if the business purchased a good or a service on credit, the supplier would need to know if they are financially able to repay that credit. Okay, and in investment analysts would use the accounting information to check if the business is a good investment and assess the return on investment. Okay, then here we deal with the qualitative characteristics, which is comparability, understandability, relevance, reliability, timeliness, and verification or verifiability. Okay, and you'll see I've added points to each characteristic to help you out. Okay, it would be I think it would be in everyone's best interest to try to include all of the characteristics and to try and to identify that in the test. I'd also say when you're doing the qualitative characteristics, always make sure to do it in point form. So point, comparability, for example, it's comparable, so example of that, and you're going to put it in point form, and so on and so on. Okay, we'll come back to that. Then you have faithful representation, which is another qualitative characteristic, and it has 3 parts: neutrality, be free from error, free from bias, and completeness. It must be a complete record of the transaction. Everything that is reported in your financial statements must be shown. Nothing must be hidden from the business. So here's your advantages of a sole trader. And here you have the advantages of the partnership. Then we have a close cooperation, which is a CC, which is unique to South Africa. The CC Act of 69 of 1984, and the Companies Act of 71 of 2008 came into effect. The registration of new close corporations ceased. The previous CCs can continue to operate, however, you cannot register a new close corporation. All right, you can find they are the advantages and some of the limitations. Then private company, Pty Ltd, public company Ltd. All right, and then you'll find below here is just the advantages and the disadvantages and the differences between a private and a public company. And here is the advantages and the disadvantages, and really a complete summary of differences between a sole trader, partnership, and a close corporation and a company, which would make it very easy to identify to summarize this information to well in the theory section. Okay guys, that's it for the theory section.